Hey, what's up, everyone? It is November 29th, Wednesday. 6 more minutes till the markets are closed for an hour. So, wanted to go over what happened today, what I'm looking forward to tomorrow. So, starting off with S&P 500 over here. It looks like it's going to be a blowout day coming off from the extension levels right here. Let's put it on there. See, it had some resistance. Look like it's going to go up through it, and then all of a sudden at 9 a.m. The bottom fell out, and we had to ended up pretty much flat for the day instead of being up for the day. But it did enable a really nice, at the end of the day right here, a good retracement trade setup that we're looking for. Came back through the 50%, hit the 61, then right through the 50s. So that's how that trade works. That one is said and done right there. Going into tomorrow, there was a expanding triangle. You see this, and this right here, but that already went and got hit right there. You can see there's the low, high, lower low, higher high using the semaphores, broke it right there, and then finished it off right there. So that's really all we have right now for the trade. If the market continues to drop tomorrow, we have some more retracement trades set up going into there. But I mean, yeah, right now it's just still in. You could consider it kind of in a consolidation pattern. Right here, you can see it's just been going from range to range. Looked like it's breaking out to the upside, but then came back down. So a lot of times, when price breaks up out of either way, if it goes out of kind of like the upper end of the consolidation range or down to the through the downside of it, and then pops right back up, look for it to go back down the other way. And so what I'm looking for, which not saying it's for sure going to happen, but like I said, as you can see right here, where this kind of like the upper band of the consolidation area, you see how price busted out, looked like it was going to go. Looks like it's going to offer run to start a new uptrend. Well, that didn't happen. It came back down into it. So a lot of times when that happens, you can look for price to continue all the way down here to the downside and bust out here down the lower end to try to mimic the high side up there. And then from there, we'll just have to see once it busts off the lower end, is it going to continue down there, or is it going to do like the high end did and go back in the consolidation area? But that is the next move I'm looking for, is for a move lower to go down to break out of the lower end down there for the S&P 500. Going over here to the Russell 2000, still looking for both of these to go up there and get hit to that target from the expanded triangle trade setup. We had a new one right here using there's a lot of lines on here using that semaphore, that semaphore, that semaphore, because this is another expanding triangle. No, excuse me, just a triangle trade, because there you have a high, there you have the low, there you have the lower high, higher low, points 3 and 4 are within points 1 and 2 right there. So you put the inside pitchfork on points 2, 3, 4. And that's what created this one right there. So we had the breakout from it right here. And this black line is from where it broke out of this one previously. And so pretty much put the same target for the upside as the other one. So, we're just waiting for that one to go up and get hit. It looked like today that is well on its way to going up there and get hit, but then for no reason, it put on the brakes, just like the rest of the markets. And I guess some news came out or something like that. It really wasn't. Is that behind me over here? Oh, sure. And it just came back down right onto the upper trend channel line of the inside pitchfork right there. We loop that out of the way. So yeah, we're just still waiting for that. Probably I might look to get into it again tomorrow. The AMP logged me out of here, of course, like it always does. So I can't see where everything is right now. But look to get back in there probably tomorrow. We'll see, especially if we get more of a move down right here. But yeah, that's what we're looking for in the Russell 2000. We do have, I guess we could look at this. This is potential. I don't think it's big enough though. Retracement trade right here. How much is that? What's the profit potential? Is it more than 2 points? Close. Okay, we'll consider that, taking that for a retracement trade setup as well. Going over here to the Dow Jones. This is what I talked about at the end of the day yesterday. The reason why take the extend lines off. We had a potential expanding triangle. See, there's the low, there's the high semaphore, lower low. And then at the time yesterday, I was talking about this was the potential next semaphore right there, but it had not formed. You can see the semaphore, there hadn't been a green one formed right up there. And we had a close below it to signify that it could have been a potential trade if that formed. But like I said, the reason why I don't take it until the semaphore does form, because this same thing could happen where the price looks like it's going to go down, but it just keeps creeping on up, created a new high right up there. And then finally the semaphore was created. So we go over the hair and draw right there. Price did close below it to create the short trade that we're looking for, right, going through right here. And then the price looked like it was going to go down here and hit it, but still did not. So it still isn't a short setup right here. This really isn't that good of a setup to take, though, because since the exit line is going on a sliding scale up right here, it just creates a bad or worse risk reward scenario as time goes on for this, because the further time goes on, the worse the risk reward goes. And then if the price continues to go up, hits the upper band of it, we'll look for the exits coming somewhere down to where the original breakout was of the median line, right over here. There's was the entry was, so something north of there, so something about right in here. And we'll put this box right here for the upper band of that box right there. Probably something like that would be probably like the target area we're looking for that right there. But yeah, that's the trade setup we're looking for the what is it? Dow Jones right there. Here we had an expanding triangle right here. 1, 2, 3, 4. Let's see what that looks like right here. Nothing happened at all. So 1, 2, 3, 4. Yeah, okay, it broke out right there. And then for a small profit right there. So that happened, but that was 2 days ago or yesterday when that one was. All right, going over to oil. Here is oil going on right here. And I got in right here at another contract right up there. And so then, hold on, let me, never mind, no big deal. But stupid AMP locked me out. I'm not going to log in right back now. But so here's the trade we're in right now. Here's the trade. So it was this one right here. That's where it is short, closing below the inside pitchfork for the triangle trade right here. See, there's the low, there's the high. Lower low, higher high, so 2, 3, 4, and then price broke out right there. So we're looking for price coming down to this green line right there. The black line just signifies that was the entry level for it. But price, and that was the shorts I did, looking for, big retracement back down to the 71s. Of course, price has gone the complete opposite direction. It is up to 77, over $78 today. So that's what usually goes on. When I make prediction, it goes complete opposite way. So just do the opposite when I make a prediction like that, especially a shorts video. So it came up, hit the upper end of the trend channel right there. So when that happens, the target removes from the bottom of the channel down there and then goes to closer to where the either median line is right here. Yeah, the median line where the initial breakout was right over there. So we can really put it right over about right here-ish, something like that, about right there. So that's probably where the exit is going to be for it. And so since this right here was where the original entry was, right here, what you're looking at is, for that one, it would be a loss of about 127 ticks, but getting in right here, come on the way back down, it's about a gain of about 230. So you're looking at about 100 or so, roughly, tick gain right there. If just one contract, I get in with the second contract, and that's obviously a lot bigger gain for it. But I think actually I got in a little bit better right over there for it, so it won't be as bad of a loss. But yeah, that's what we're looking for, is a retracement coming back down over here from that trend channel. And also you'll notice it is bouncing off of a potential, delete that. You see the lines, there's the 38, the 50, 61.8, and the red one right there is the 76. So it is bouncing off of a 38.2% Fibonacci retracement level right there. So we'll look for, we'll look for some weakness here in oil to come back down to around this, probably around that level-ish right there. It's about the high 75s, $75.72-ish cents. I don't have an exact prediction, but that's just going to be around the level between about there and probably around like 76-ish, a little bit high, but somewhere back in there is where we're looking for. The retracement come back down to. So nothing big like I was predicting the other day, especially since oil this week has had a real nice uptrend going on up there for it. But also with that, let's tell you what, let me put to just like a market, so know exactly where it is right there. We did have this is another triangle trade right here, and this is a target to look for here for the upsides. Here we have the 0.1 high, 0.2 low, 0.3 lower high, 0.4 higher low right there. So then we put the inside pitchfork on points 2, 3, 4. So here was the breakout for this move right up here, and that's where you could have gotten long right there. And so the target we're looking for this move up here, which looks like obviously this one is probably going to get hit more so than the one I just mentioned, the downside target would be up here, right around up here, you know, going into tomorrow when the market opens back up. I doubt it's going to pop up. Let's see, $1.60. But, you know, going into tomorrow, because what's right there, 6:30, 7:30, 8:30-ish, right around there, you know, it could go up easily go up another 1.3%, another dollar, or to hit that, to finish out this long setup that we have in crude oil right here. So that definitely is a possibility of that going up there and getting hit. But like the one, let me show what it looks like with the short. So that's not what I wanted. Let's show I missed one off there. I have to go back and fix that. But going up there with the short setup for it, here's what that looks like. Well, that's the long. Here's the short right there. So, you know, there's a little crossover-ish right there. But basically what I'm trying to say is look for resistance coming up in this area, because when we have retracement trade 38, we have the target for that long triangle setup, plus we have 50% retracement right here. So even if oil does push up higher, you know, all the way up to about $79, I would expect resistance to happen and look for a retracement back down to the high 75s to the $76 level. And then we have old Nasdaq. This is actually a trade I did take today because price, by the time the market opened, when I looked at it, it was about 8 o'clock, 7:45 where the market opened. I think I got in on around that-ish candle and then got out somewhere right around there just to get out since I was in a couple other trades. But the reason why is because this is, let me take this thing off. That's a retracement trade setup right there. Is an expanding triangle trade. So you can see here's 0.1, 0.2, 0.3, and a 0.4. So what we do is we take the shift pitchfork, put it on points 2, 3, and 4, and then when price closes above the 2, 3, 4. So when it closes below the median line right here, that is the signal to go short. So there's a black line signaling that's the level to go short right there. The original target was down here at the, I think it's the 1.5 level. Yeah, 1.5 level. Looked like it was going to go down and hit it this morning. Did not. And we had a rally, or excuse me, yesterday morning. And we just had a rally up there ever since. And then when it hit this upper shift pitchfork channel the other way, that signifies that's where you get in with your second contract if you're already down here with your first one, and then you move the exit closer to where the entry is, somewhere between like the entry point and then just slightly above it, somewhere like that ish. And as you can see, price came down and hit that upper part of it as well. Came real close to hitting the entry level, but I usually go a little bit higher just to ensure it goes and gets hit. So something like that would have been good for this upper target for it. So like even if you had gotten in right there, you're looking at we'll say worst case scenario. Let's say you took it up right here just to be really safe to get out. So you're looking at a 136. I think I can't read that right there. How much is that? 35-point loss right there. But if you go up right here, you shorted up the line, take it to right there, there's a 96. So you're looking at a 60-point gain there in Nasdaq for it. And that's what that keeps you safe getting down there or not. It did look like this does happen from time to time where it looked like, look at this bar right here. Like if you were, because I remember when I got in right here, the next couple bars, the next hour or so, especially when the market opened here at 8:30 Central Standard Time, it looked like it was just blowing and going. I mean, this thing was taking off big time. Then you have a little, what's that, shooting star? I don't know what the candle formations are. I'd really look at those. But anyways, you had that candle and then the big red one down, and that's what signified is going down the rest of the day. And also one reason I wanted to take it because before the even market opened, the market was north of the daily extension level up here. It was pushing up north of it. It looked like it was going to be a blowout day. I really didn't think it was going to be a blowout day just because there was already this short setup right here, and then it hitting it right there, plus it being extended past the daily high extension level of the day. I was looking for a pullback at least into this level, something not a little bit shorter, which it ended up doing. So for once, I was right in that prediction for it. But that was another reason why, where I felt that it definitely was going to come down today. So shorted it up there, and then this trade came down and completed it to get that one out there. So that short trade for the Nasdaq is over, but we do have another one which I will look at taking tomorrow if it didn't happen in the overnight session, because I'm not going to have it leave. Oh, it's already done. Never mind. This is a retracement trade, and all you're looking for is the A, B, C, D up here. I'll just put that on there to show what it looks like. A, B, C, D, and how that looks. All we're looking for is it going down to is from the B to C, going down at least to the 50% retracement level, which it did. And obviously the C point can't go below the A point. And then going up there and hitting at least the 1.146, which it did. So once it does that, then we just change it to the retracement levels, 38.50, 61.8, 76.4. And then when price came down here, ticked perfectly off the 50%. I missed this one, unfortunately. It came up and hit the 38% to finish off that trade right there. So yeah, I mean, going into tomorrow, you can see even like this one right here is still in consolidation mode, just like pretty much all the other markets. It did look like, it's not a perfect science in drawing these things. I mean, you could consider, that does look like a just real slowly evolving trend channel churning here to the upside. It does fit kind of really neatly in it, so yeah, it's definitely what we could consider, or if you just want to consider it to be like more of a bigger consolidation area, that could be it. Either one of those could be right for it. Maybe the consolidation area was something more like that. Let's see something like that. Broke out, came back down in it, and then it's just slowly grinding north up there. So that does actually look pretty good for as far as it being a trend up. That's just slowly grinding up for it. Let's see, does it work for the kind of as well too, yeah. So it's maybe just kind of a slow grind up here to the upside. Then we'll go check Bitcoin here real quick. Let's see what we had here now. See, there's the high, low, high, low, low. Okay, so in here's the entry, there's the target we're looking for. Did not go up there and get hit, and now price is moving back forward. So the target is still the scale line up here from about that 39,270 slide scale down. If the price continues to drop out, hits down here at the yellow line, then the target would move somewhere like right around there to that bottom side of that rectangle right there for the target. But that's where it currently is. If you look at the longer term for Bitcoin, we're still looking at this 5-wave potential Elliott move. The target 78,815. If it drops below the purple line right here at 14,170, then the 5-wave Elliott move is invalidated, and that 78,815 target is no more. But that is currently where it is. We do have a potential also retracement setup down here. Well, it is a retracement setup. If price comes all the way back down to the 29,000, 28,500 level for it right there. Can this be a potential? No, it needs to go up a little bit more for that to be potential going for it. But that's it for today for Wednesday, November 29th. Thanks, bye. All right, we are still live here. Was that? Here we go. Yeah. That community. I don't know what that is. All right, so let's get some stocks here. See if there's any long-term stuff to look at. Oh, here we go. So Netflix, not Netflix, Facebook or Meta. We have an expanding triangle trade right here. So let's see where that potential target would put us at. All right, yeah, so we still have, what's this price target on Meta? 420s, yeah, around the 420-ish area, so still a lot more room to run. Look right here, just hopped over the median line right there when it got to it. Way down here at 230-ish. Man, I wish I'd seen that. Goodness, it'd been nice down in May. Yeah, that's a nice, wow. Yeah, we had another one right over here. So this looks like, see where this one up and got hit. Broke out right here. Look at that. It hopped over it too. Went there and hit that. Let's see what that gain would have been. 40 dollars, 25, 24% gain right there from January 19 to about a year. Not bad. So the weekly has anything? Retracement trade set up. See what that look like. I have 50 right up there. How much would that have been? 6%. It's a nice little quick scalp within a week. So you can either use the weekly for the orange semaphores or the daily. So that's what we're looking for Facebook.